And to another conversation. Now, a recent report from PiggyVest revealed that 4 in 10 Nigerians are in debt and 26% owe loan apps. Another study by SBM Intelligence found that 27% of Nigerians across different income categories now turn to loan apps to cope with their living expenses amidst record inflation. Well, joining us now to discuss, we have Dennis Ikara. As a business analyst at Dathan Tech, joining me via Zoom. Great to have you on the show.
Thank you, Laddie.
Fantastic. It's great to have you. So,
a pleasure to be here.
Yeah, so definitely looking at the stats there from SBM Intelligence and PiggyVest. So we're seeing, tough times, pushing people to try and get some of these loans. I guess the loans are easily accessible. But one thing I fear about those loans are the rates. They're really, really, really high. So how are you seeing the digital lending space, in Nigeria? How has it evolved over the years for you?
Yes. Thank you, Laddie. It's nice to be here. So, digital lending in Nigeria is a story of transformation, almost like going from a Nokia 3310 to the latest iPhone overnight. A few years ago, borrowing money meant you had to endure long queues, meet strict collateral requirements, and hope that the bank manager liked your tie that day. But now, just a few taps on your phone and voila, you've got the funds. Over the past decade, companies like Trade
Carbon. Checking.
All right, so we'll come back, Dennis. I'll come back to you in a moment. But definitely, I know these, as Dennis alluded to there, it's easier to have access to these loans. But at the end of the day, we've seen the likes of competition, our competition agency there, looking at managing how these loan apps, how they go about recovery. Because we've seen in the past where some people have to get shamed, before they can actually pay back. So let me go back to Dennis now. So Dennis, I lost you for a moment there, but you can conclude your thought.
Yes, can you hear me now?
Yes, I can hear you now.
So I was saying, over the past decade, companies like Threadlender, we have the Carbon, we have Fair Money and Branch. They have taken the lead, offering instant loans without collateral. And of course, they are competing with traditional banks like GT Bank, which joined the race recently with Quick Credit, which is a fast and affordable product itself. And even the regulators have stepped in to clean up the industry. The Central Bank of Nigeria now requires digital lenders to register under its guidelines, while the Federal Competition and Consumer Protection Commission ensures that they behave. No more threatening text to your contacts if you miss a payment, and it's fast evolving space. And the numbers have backed it up, with over 200 digital lenders today. The future is as bright as Lagos traffic at rush hour, but this time with fewer headaches.
Dennis, a lot you definitely unpack there, and you are seeing growth so far, with this digital lending space. But talking about most Nigerians turning to these loan apps now, to get quick and easy loans. How would you say is impacting household lending, so far? Do the benefits outweigh the other issues, we have with that lending sector?
No, it does add a lot of benefits, digital lending has made it has made credit more accessible to underserved populations, including those without formal employment or collateral. Borrowers can now access small loans within minutes, enabling them to handle emergencies, start macro business, or even cover educational expenses, etc. Okay, so picture this. It's the end of the month, and you are staring at your empty wallet, and there's an expected school fees for you to make. Back in the day, your only options will be going to borrow from your friends, who will never let you be, or visiting a money lender who probably charge you your firstborn child for interest. But digital lending changed all that overnight. Now, platforms like the Trade Lender, the Fair Money, and Palm Credit can disburse loans in minutes. No questions asked. People use these loans to pay medical bills. They also invest in small businesses or simply keep the lights on, all thanks to NEPA. But here's a real example. I have a friend who once used a digital loan app to buy stock for a small grocery just before Christmas. And within weeks, he doubled his profits. Digital platforms also reduce stigma as borrowers can avoid the traditional face-to-face interactions. But of course, borrowers need to be cautious because high interest rates and short payment period can turn a blessing into a lesson in the financial literacy.
And do you think a time will come where most of these digital lenders can actually, give you more time, to pay these loans and at a more affordable rates? Do you think that's where this, segment is going to, or will it just remain like this, with higher interest rates and, short times to pay?
I think it's fast evolving and it will change. It will get better. It only gets better. Like I tell people, digital lending fosters this financial inclusion by extending credit access to underserved population. So it's going to get better with time. For instance, I know carbon integration with mobile wallets ensures rural farmers and traders to secure loans without even visiting a bank branch. And do you know that more than 40% of Nigerian adults still don't have access to formal financial services? And that's a lot of people compared to the Nigerian population. But here's the good news. Digital lending is breaking all barriers with smartphone penetration exceeding more than 100 million users. Even someone in the most remote village can now access credit if they have a mobile phone. Let me share a heartwarming example. Recently, in northern Nigeria, a group of female farmers used a digital platform to get loans for fertilizers and seeds. And by harvest time, their yields have doubled. What's more, these women don't have to rely on middlemen who had previously exploited them. Digital lenders like OPay, Paga are also making things seamless by integrating mobile wallets. So borrowers don't need a bank account. It's like turning a no-entry sign into a welcome home mat for millions of underserved Nigerians, which is a wonderful development.
Right, and definitely the players, most of these businesses that are playing in the digital lending space, most of them also have to give out these loans to people that they don't know, they don't really have that much information about. So I'm guessing that's why the rates are really, really high. But how are the digital lenders, how are they managing risk, on their end? How are they managing, reducing defaults for most of these loans?
Risk management in digital lending is like trying to predict the weather in Lagos. It's unpredictable but manageable with the right tools. So digital lenders rely on algorithms that use unconventional data sources, such as how you recharge your phone, or how your social media, or even your social media behavior. Yes, that tweet you posted last week about loving suya might just be your unofficial credit score. Take fair money, for instance. They start borrowers with small loans and scale based on repayment history, leveraging on AI to minimize defaults. They use AI to assess a borrower's behavior and send reminders to ensure repayment. And if someone does default, they don't just send debt collectors. They negotiate repayment plans. Some platforms also partner with credit bureaus to blacklist chronic defaulters. I currently work at Devtown Technologies, and I work on projects that integrated blockchain technology into credit system. This ensures transparency for both the borrowers and the lenders, making risk management more robust. Let's just say it's harder to ghost a lender when there's a blockchain involved.
Right. So, okay. So, definitely we're seeing innovations with what you've shared so far. But what are you expecting, going forward as as Nigeria, continues to, play home to these businesses, and what risks are you seeing for the digital lending space, going forward?
Yes, thank you once again. The future of digital lending is so exciting. It feels like we are watching a Nollywood blockbuster in real time. So, like I was saying earlier, blockchain is making transactions more secured, and we are seeing a rise in peer-to-peer lending platforms. Imagine borrowing money from a faceless institution, but from someone just like you, only this time with a bit more cash to spare. For instance, Huda Bank is combining spending data with personalized credit offers, showing that even a digital bank can enter the lending space. That's another exciting trend. Some platforms now reward borrowers for good repayment behavior with points, discounts, or even larger loans. And at Devtan Technologies, my team are exploring using APIs, that's application programming interface, to connect digital lenders with e-commerce platform. Imagine this: you are shopping for a fridge online, and a loan offer pops up saying, "Pay later, no stress." That's the direction we are heading. Convenience, accessibility, and innovation all rolled into one. That's a very good thing. It's exciting.
All right, I guess we'll keep watching how the credit economy grows in Nigeria. But it was great having you in perspective, Dennis, here as a business analyst at Devtan Technology. Thank you so much for joining us today.
Thank you, Ladi. Pleasure to be here.